Hey traders, Nick here, looking at the whole market in a fast 2-3 minutes. I'm going to try. All right, so left to right, we have the S&P, the NASDAQ, the Dow, and the small caps. We're looking at futures contracts. So think SPX, NDX, the Dow Industrial Average, and the RUT for the small caps. So going into today, they faded the range and right into what was resistance last week. This was the Friday close, how they burst onto the scene out of the blue. It was strange, and they gave it back up. That's normal. In fact, I drew these arrows in the morning. I said they either take that out and run, or they fade and they try to run again tomorrow. So today is Tuesday. Monday was closed in the US, and maybe this will happen on Wednesday. We have the Fed minutes tomorrow, so they shouldn't move the market because these are past events, but people are hung up on what they've said, even though the Fed heads speak all the time, so it's not a mystery that they want to inflate everything. All right, so even if this fails, it has support, it has support. This box has been ongoing for a couple of weeks, so I keep extending it to the right. In fact, you'll see me do it lower. If the breakout happened almost exactly as we charted it, so it's not a surprise what's going on. The NASDAQ, same deal, broke out Friday, crazy move on Friday. They came back and tested the neckline on Tuesday. So we have an ascending trend line here. So tomorrow, if I were to guess, I don't want to guesstimate ahead of the day tomorrow, so I'll do this usually in the morning for myself. If the selling continues, they'll bounce here. They try to recover what they just lost, and if they fail, they'll probably come back and test what? The prior neckline, which is this red guy. So I'll extend that, and this is the homework I do every day for myself. And if I'm active trading and I'm not doing such a thing, then I'm playing with fire, because the machines do that all the time. This is an important candle. Don't lose that. The Dow, today the Dow was strongest. We had a You see, the problem with the Dow is price weighted. So if you have one big stock, by that I mean not a big market cap, a big high ticket like Boeing, for example, it's $217. Today was up 3%. 3%. So it impacts the whole index more than a stock that's up 6% but is only priced $20. So and it moves the index in a way where it shouldn't, or at least it misleads us into thinking it's healthier than the other indices, whereas it's only one or two stocks in there that are actually moving it. Same deal though. Look, breakout, come back, test the neckline. So this is, what is this? Normal price action. Nothing to see. The only thing I want to see is this one. This morning I had this candle in it. This arrow, I said breakout with a question mark. These are prior leaders. I said, are they going to break out? They had a nice line to break out from. Clean cut line that they could have gone boom like this. They didn't. They failed the worst, and luckily they held the prior support. Look at all these wicks down here. This is like saying, nope, I don't want to be here. Nope, nope, nope. So now another nope. If this fails, then it becomes like a head and shoulders, and then they take this leg down. So I changed the wording saying breakout failed on Tuesday. So now if price comes back to it, I'll say, are we watching the breakout? Now we're watching the breakdown. So hold support on Wednesday, question mark. Will it? So the first line of defense, what happened Tuesday? Lose that, and then they start looking at this candle. Lose that, and then they start looking at 2200. So the path is rebound a little bit, trying to recover and get back to where you were before the Tuesday started. Mind you, overnight, everything made new highs, which was insane, almost. Or let go of the ghost and come back down to the potential target, which if it fails to hold up here. So this is the one thing I'm looking at then tomorrow. This guy, what's going to happen inside this box? Are they going to hold it or come back down? Which is not a problem. I mean, that's index has been flying high. So this is the whole market at a glance. These are all-time high, folks. Clearly not an obvious point of entry for anything. So caution is definitely well worth it. I've said it 100 times. The easy caution is buying VIX calls when it's near 20. Friday it dropped below 20 by a penny or two or three. I think it's complete manipulation. So nothing is new from Thursday to Friday for it to say, oh, no more worries. In fact, if there are no more worries, why is the government giving us $4 trillion in aid this year on top of the 4 or 5 trillion last year? Trillion is a lot of money. Quiz, if you haven't heard me say it, do you know what's after trillion? I bet you 9 people out of 10 don't, which is fine. That's because we shouldn't know it yet. It's jumping the gun. That's way too much money to be talking about it in T's. I didn't say billion enough. Now they want me to say trillion every day. Money is falling off a cliff. So caution is warranted. The stock market has never been healthier, yet the economy has never been worse because the governments are panicking. Yellen is panicking. The Fed head has been panicking since 2018. The White House is panicking, dumping 1.9 trillion. By the way, the Fed dumps 1.45 trillion a year. The rate is like 120 billion a month, every month. Nobody talks about that. Anyway, Nick signing out.